So over the last 24 hours, Google searches for the phrase subcontractor accounting software they've experienced this staggering 15,950% breakout spike.
Wow. Yeah, that's massive.
Right, it's huge. Something out there is just fundamentally breaking.
It really is. I mean, it's this sudden, massive realization that's just sweeping through the market right now. We are basically watching an entire industry hit a collective wall.
Yeah, and welcome to this deep dive for Scaling Legends.
Yeah.
If you're a construction business owner listening to this, you know exactly what that wall feels like.
Absolutely. They live it every day.
Exactly. And our mission today is to really explore this critical tipping point. We've pulled together a massive stack of sources, software architecture specs, financial white papers, heavy industry data.
All the fun stuff.
All the really fun stuff. But we're using it to map out the exact moment a growing construction company basically outgrows its financial stack.
Because there's a core conflict happening out in the field right now.
Right. Most contractors are trying to run these multi-million-dollar construction empires on software that was fundamentally designed for, like, a local bakery.
Yes. We are talking about QuickBooks.
Exactly. I mean, it's brilliant for selling cupcakes, right? Or running a small consulting firm. But it just starts gasping for air when you ask it to pour, 10,000 yards of concrete.
Yeah, and track 100 different labor codes at the same time.
Right.
We need to ground this in reality immediately, though. We aren't dealing in abstract theory today.
No, not at all.
We are looking at the specific mechanisms of how you make the right software choice for your specific revenue size. Because outgrowing your accounting system, it isn't a badge of honor.
Right. It's not like, hey, we're so big now.
Exactly. It's a massive, bleeding operational liability.
So let's figure out why this search spike is happening right now. I mean, almost every contractor starts with QuickBooks. It is the absolute default.
Oh, without a doubt.
And honestly, it works quite well when your revenue is sitting around, say, $500,000.
Yeah, at that $500,000 stage, your primary goal is just basic tax compliance.
Right, you're doing a few jobs. You're probably the owner, the estimator, and the lead project manager all rolled into one.
You're wearing all the hats. You just need to make sure money is going into the bank and checks are clearing.
And the actual financial data is still basically living in your head, right? The software is just acting as a digital checkbook.
Exactly. The underlying architecture of that generic software handles that straightforward cash-in, cash-out process without any friction at all.
But here's the mechanism I really want to understand. If it works so seamlessly at 500 grand, why does it suddenly become this massive bottleneck when you hit $3 to $5 million in revenue?
Well,
or when you suddenly have 10 or 15 active jobs running concurrently? Like, what physically breaks in the system?
What breaks is the relational database, or, well, really the lack of one.
Okay, what do you mean by that?
So the cost of bad accounting in construction is brutal, and it centers entirely on visibility. When you rely on generic software at that $3 to $5 million tier, you end up finding out which jobs actually made money only after the project is completely closed out.
Oh, wow. So you don't even know until the end.
Right. You get to the end of a massive 6-month build, the dust finally settles, you reconcile your massive buckets of expenses, and you realize you completely lost your shirt on labor overruns back in month 2.
Yikes. And at that point, the project is in the rearview mirror.
Exactly. It is far too late to fix anything. You can't go back in time, pull 2 guys off the crew to save labor costs, or renegotiate your material pricing.
So you're basically driving a massive vehicle at highway speeds by staring exclusively at the rear view mirror.
Yes.
And just hoping you don't hit anything in front of you.
That is the perfect analogy. In construction, you need to know if a job is experiencing profit fade on day 14, not day 140.
Right. Profit fade.
Yeah.
That's that slow, quiet bleed, right? Where a job looks highly profitable when you secure the bid, but it slowly hemorrhages margin.
Exactly. Because of untracked change orders or material waste or unrecorded overtime, it just chips away at your profit.
And that tracks perfectly with what we're seeing. If you look at Smart Business Automator's Market Intelligence Report, 72% of construction software buyers rank job costing as their absolute #1 requirement.
72%. That's huge.
It is. And that's a very architecture that generic, off-the-shelf software just cannot handle natively.
Because job costing isn't just a feature, it is the entire central nervous system of a construction business.
Right. It means tracking every single hour of labor, every sheet of drywall,
Every single subcontractor invoice, and tying it directly to a specific cost code on a specific project.
which generic software doesn't do. It just dumps all your labor into one giant ledger account labeled like payroll expense.
Yeah, it doesn't know the difference between demolition labor on project A and finish carpentry on project B. It's just blind.
So if the generic software fails because its fundamental architecture lacks these construction-specific mechanisms, we really need to define the non-negotiables.
Definitely.
If I'm an owner looking to upgrade right now, what are the core functionalities my system absolutely must have before I even look at a vendor's pricing?
Well, it starts with native job costing by cost code, like we just discussed. That is the bedrock.
Okay.
But directly attached to that is WIP, reporting the work in progress schedule.
Let's hold on to the WIP for just a second,
Yeah.
because we also need to add AIA billing to that list, right?
Absolutely.
Specifically the G702 and G703 progression forms. Plus, we need certified payroll, we need retainage tracking.
And equipment costing.
Right, knowing the hourly utilization rate, fuel, and maintenance costs of a specific excavator on a specific job site.
Exactly. And look, if a vendor's software cannot perform every single one of those functions natively without you having to build some clunky workaround,
You just walk away.
you walk away, period.
Now, when contractors try to handle things like AIA billing or complex WIP schedules without purpose-built software, they inevitably start exporting raw data into these massive, fragile Excel spreadsheets.
Which is terrifying.
It really is. I mean, exporting AIA billing and WIP to manual Excel sheets is like using a typewriter in the age of email. It's prone to errors, incredibly slow, and honestly, just a mess.
It's like trying to build a 30-story skyscraper where the electricians, the plumbers, and the framers are all working off completely different blueprints.
Oh, that's a great way to put it. If someone in the office updates a load-bearing number on their spreadsheet, no one else knows about it until the roof literally caves in.
The blueprint analogy really highlights the sheer danger of siloed data. Let's look at the mechanism of why these specific features are non-negotiable. Take the WIP schedule.
Right.
You're a construction owner. You know what a work-in-progress report is. But the danger isn't failing to produce one.
What is it then?
The danger is how bad software calculates it. Generic software calculates profitability based purely on cash out the door. So if you pre-build a client for massive material orders, QuickBooks might tell you that you are insanely profitable in month 1.
Because the cash hit the bank.
Exactly. But your project manager knows you are actually 2 weeks behind schedule and burning through overtime like crazy.
Because the generic software doesn't understand the concept of percentage of completion.
Spot on. An actual construction ERP connects field completion percentage directly to the general ledger.
Okay, so if you are only 20% complete on a phase, but you've billed for 40%.
The system automatically creates an overbilling liability. It recognizes that cash isn't profit yet.
Right, which is huge.
If you don't have that mechanism, your over-under billings look perfectly healthy to the bank while you are secretly bleeding out cash on the site. A highly accurate WIP is strictly required for bonding, for maintaining a line of credit with your bank, and for accurate financial statements.
Wait, let's pause on retainage for a second too.
Yeah.
Because if a client holds back, say, 10% of my payment until substantial completion, why can't I just track that in a regular accounts receivable column?
Oh, that's a common trap.
Why do I need specialized software just to track money I'm clearly owed?
Because general accounting software treats a 10% retainage holdback as a regular overdue invoice.
Oh, I see.
Yeah, it just sits in your accounts. Receivable aging report looking like a client is simply refusing to pay.
So suddenly, your AR aging report looks terrible.
Exactly. Your controller is panicking, your bank thinks you have massive uncollected bad debt, and your automated cash flow forecast assumes you are getting that 10% in 30 days.
When in reality, you aren't seeing that retainage money for maybe 9 to 12 months.
Exactly. Purpose-built software separates retainage from standard AR, keeping your cash flow projections actually accurate.
And certified payroll works the exact same way, doesn't it? Generic systems just cannot handle prevailing wage calculations natively.
No, they can't. You end up calculating Davis-Bacon rates manually in a spreadsheet, then dumping a single lump sum into the accounting software just to cut the checks.
Which means if you get audited by the state, you have absolutely zero traceable line items tying that specific check to the federally funded cost code.
It is a massive compliance liability, and this is why integration is key. Smart Business Automator's Market Intelligence Report notes that having a financial dashboard integrated directly with your accounting provides real-time job profitability.
Which allows you to actually benchmark your performance against industry standards?
Right. You cannot improve your margins if you can't measure your actual costs against your peers in real time.
Okay, so if all those features are non-negotiable, it completely explains why owners are abandoning generic software right now. But that creates a new trap, doesn't it?
It does.
Because if I'm a $2 or $3 million contractor, I cannot afford a $50,000 enterprise ERP system.
No, of course not.
So how does a construction owner actually choose the right platform without overspending or completely under-equipping their team?
Well, you have to map the technology to your specific growth phase. Let's look at Tier 1, the startup and early growth phase companies doing under $3 million in revenue.
Okay.
At this stage, you can absolutely survive on QuickBooks Online, which runs anywhere from $38 to $275 a month. Or you might use Xero. But the catch is you have to add an operational overlay.
Right, so you're talking about plugging in a project management tool like Buildertrend or Notify to handle the field data and the job costing.
Yes.
And then syncing that back to the accounting software. You can usually keep your total software stack under $500 a month doing that.
Exactly. You are essentially building a digital bridge between the bakery software and the job site. Though there is a strategic alternative at this phase.
What's that?
You could start early with a platform called Foundation, which starts around $400 a month. The mechanism there is that you are on a construction-specific relational database from day one.
So you never have to rip out your core accounting engine later as you scale.
Right.
But let's say I took the overlay route. I've got Buildertrend talking to QuickBooks. I hit that $3 to $10 million revenue range. We call this the mid-market squeeze.
Oh, yeah. Tier 2.
What happens to that digital bridge when I start running like 15 complex jobs?
The bridge collapses.
Wow.
Just collapses.
Pretty much. What happens is those two systems are entirely different databases trying to shake hands through an API connector that might update once an hour or once a day.
Okay.
So if a project manager in the field logs 3 hours of overtime to a concrete pour, the project management software knows it immediately, but the accounting software doesn't know it until the sync happens.
And what if the sync drops the data or miscategorizes it? Then someone in the office has to manually re-enter it. And the second a human has to manually move data from one screen to another, you have lost the integrity of the system.
You get dual entry, lost data, and profit fade.
Exactly. This mid-market phase is where you really need a unified system. Foundation by Dexter Chaney is highly utilized here because it's purpose-built for real job costing, WIP, and AIA.
Right. Sage 100 Contractor is another incredibly strong option in that space. I think it runs about $160 per user per month. It handles complex financial reporting beautifully.
It does. And you also have Coins by Trimble, which integrates natively with other Trimble estimating tools.
Which brings us to Tier 3, the enterprise domain. We are talking $10 million in revenue and far beyond.
This is where you need the heavy hitters.
Right. You've got Sage Intact Construction, which is a massive cloud-based multi-entity architecture. You have Acumatica Construction Edition.
Which is entirely cloud native and growing rapidly.
And there is Viewpoint Vista, which has really been the long-standing powerhouse for heavy civil contractors, mostly because its equipment costing mechanisms are incredibly deep.
Yes. And then there's CME for the really massive general contractors.
So at that enterprise tier, you aren't just buying an accounting tool anymore.
No, you are buying a true enterprise resource planning system. An ERP. It touches every single corner of your business.
Right.
If a superintendent enters a delayed material delivery on an iPad in the field, it automatically updates the WIP schedule, adjusts the cash flow forecast, and alerts the procurement team in the office instantaneously.
It's just one single source of truth.
Exactly.
Let me challenge this progression for a second, though.
Sure.
Let's say I'm a contractor hovering right around that $4 million mark.
Yeah.
I have my patched up system QuickBooks tied to an overlay. It is glitching, but it is cheap.
Yeah.
Is it better to just endure the pain and stick with that patched system as long as humanly possible to preserve capital? Or should I rip the Band-Aid off and jump to a Tier 2 unified system immediately?
You must rip the Band-Aid off.
Really? Just go for it.
Yes, it comes down to the mechanism of hidden costs. The money you think you are saving on cheaper software licenses, you are losing tenfold in administrative waste and undiscovered margin fade.
Because you can't see what's happening.
Right. When your estimators don't have accurate historical cost data because the sync keeps failing, they underbid the next 3 jobs.
Oh, wow.
And that costs you hundreds of thousands of dollars, which is far more than the software implementation fee.
That makes total sense.
Yeah.
But knowing what software architecture to buy is very different from dealing with the harsh realities of deploying it.
Very different.
What are the specific red flashing lights, the operational triggers that tell an owner, we cannot wait another month, we have to switch right now?
The most glaring trigger is the manual WIP week.
The manual WIP week.
Yeah. If your controller or your accounting team has to lock themselves in an office for 4 straight days, doing manual spreadsheet gymnastics just to produce a single work-in-progress schedule for the bank, your system is dead.
Wow. That is a massive operational failure.
It is.
Another trigger we see is the bonding company, right?
Yes.
When your surety starts demanding granular reports that you physically cannot generate from your system without making educated guesses in Excel, your ability to bid on larger jobs is basically frozen.
Exactly. Or consider your talent pipeline.
Right. When you hire a sharp, modern project manager or estimator, and they are completely starved for integrated data, they simply cannot see the historical costs they need to bid accurately.
And we have to be honest about the implementation reality here. Buying the software is the exciting part. The code works. The software isn't the problem.
So what is the problem?
What is incredibly difficult and painful is the data migration and the human adoption.
Right, let's lay out the actual blueprint for switching then.
Okay.
You are making this jump, you need a realistic budget. You're looking at $5,000 to $15,000 just for the implementation and professional consulting fees.
And that's above the software cost itself.
Exactly. Timeline-wise, you need to plan for 3 to 6 months of running both systems in parallel. I mean, do not cold switch.
Never. You never just turn off your old system on Friday and boot up the new ERP on Monday. That is a guaranteed recipe for missing payroll, defaulting on vendor payments, and causing a full-scale mutiny in your office.
Right. Running parallel systems is exhausting because you're doing double the work to verify the new system calculates exactly like the old one. But it really is the only safe harbor.
It is.
And critically, before you even migrate a single byte of data, there's a mechanism you have to fix, your chart of accounts.
Oh, please, yes.
Migrating a messy, disorganized chart of accounts into a powerful new ERP is like moving into a pristine new mansion, but bringing all the trash from your old apartment.
That's exactly what it's like. If your current chart of accounts just has these massive, vague buckets labeled materials and labor, you have to break that down into CSI divisions before you migrate.
Right. You need distinct codes for concrete labor, framing labor, electrical labor.
Yes, because if you don't map your cost codes to your actual real-world field workflows, the new software will just give you bad data faster.
So who actually needs to be trained on this new architecture?
Yeah.
Because traditionally, an owner just sends the accounting team to a software seminar for 2 days and assumes the problem is solved.
Which is a fatal operational flaw. The training must heavily involve the project managers out in the field.
Right, not just the bookkeepers.
Exactly. They are the ones actually coding the time cards, approving the material receipts, and tracking the equipment hours. If the project managers do not understand the cost codes and they just enter garbage data on the job site, the system fails instantly.
Because the most powerful ERP in the world cannot fix incorrect data entered by a PM who doesn't understand the financial language of the business.
The field and the office must speak the exact same language.
And this leads us to the broader operational picture. Upgrading your financial engine is crucial. It's the foundation. But as a construction business scales, the administrative burden multiplies across all operations, right? Not just accounting.
Oh, it's everywhere.
Teams are managing daily logs, RFIs, submittals, and the cascading schedule impacts of change orders. It threatens to completely drown the company in paperwork.
Because the financial software secures your margins. But a construction project generates a mountain of non-financial data every single day.
Right.
If you don't manage that, your project managers become highly paid data entry clerks instead of actually managing the build.
And this is where the cutting edge of the industry is really heavily investing. If you look at Smart Business Automator's Market Intelligence Report, AI is now being used to automatically tag project documents, summarize daily field reports,
detect schedule risk.
Which is incredible, honestly.
It is. And literally cross-check current project information against architectural specs to catch expensive oversights before the materials are even ordered.
And the mechanism that makes all of this possible is the API connection. You fix the core accounting first, so you know your exact costs. Then, by integrating an AI project assistant with that new ERP, you create a truly seamless data flow. So it's essentially deploying a digital superintendent that never sleeps, just constantly scanning for risks.
Precisely. When AI handles the heavy lifting of sorting submittals, or drafting initial RFI responses based on historical data, or summarizing daily logs, your project managers are liberated.
They can actually manage.
Exactly. They can oversee larger jobs, and more of them, without being buried in administrative busywork. And for the ownership team, it means gaining unclouded, real-time visibility into both budget variances and the physical health of the project.
Right. Let's bring this entire framework together.
Let's do it.
Scaling a construction business on basic, generic accounting software guarantees that you are operating with massive financial blind spots. You are finding out you bled cash on a job when it is far too late to correct the course.
Way too late.
Upgrading your systems, moving from a patched-up starter kit to a true construction-specific mid-market or enterprise platform, it takes capital, it takes months of parallel testing, and it requires deep organizational patience.
It really does.
But it builds the necessary relational architecture for real-time profitability tracking. It allows you to drive the business looking clearly out the windshield.
It is the fundamental difference between merely surviving project to project and actually scaling a resilient generational construction business.
So here is your immediate action item as a listener. Pull up your QuickBooks or whatever accounting software dashboard you use right now. Can you see your exact profit by active job broken down by a specific cost code this very second?
Right now.
If the answer is no, you are flying blind and you know exactly what you need to do next. Please subscribe to The Deep Dive, rate, review, and share this conversation with colleagues or your leadership team who would really benefit from understanding this shift. And be sure to visit smartbusinessautomator.com to see how these integrations can actively transform your daily operations.
And I want to leave you with a final thought to mull over. We've established today that clean, real-time data is becoming the ultimate competitive advantage in the construction industry. So what happens to the construction firms in 5 years that refuse to adopt these integrated ERP architectures? As margins tighten across the board, will they simply be outbid and completely priced out of the market by competitors who know their exact operational costs down to the penny?